Good evening. So only 5 members have joined today's session. Anyhow, we continue. Today, we start with banking system and history of banking in Sri Lanka. So we move the slides. Can you hear me? Can you hear me?
Yes, sir.
Okay. First, we look at definition of bank and how the bank differ from other financial institutions. And types of banks, type of commercial bank and function of banks, history of banking and modern development of banking system Sri Lanka. So these two parts I'm not going to discuss. So I'm quickly move to these 4 areas so that I will focus on the examinations. The banking sector is one of the most important sector of an economy of a country. So in the modern world, all financial systems are depending on the banking sector. So it is not new for you. So everywhere, each economy having the banking system. Think a world where there is no bank. So it's very difficult for the individuals as well as businesses. It's very hard. Banks plays a major role in mobilizing fund in the financial institutions, the world of finance, the sector finance. A bank plays a major portion, major role. So that will significantly contribute for the economic development. So nowadays, a bank are not only play a role on loan supplier or money deposits or saving holder, modern banks serves various kind of services for their customers. The traditional bank, the main role of traditional bank, accumulated fund from many part of their isolated, clustered savers. So they bank bring all fund together and it provide loan, right? It provide loan. So this is the traditional banking function. But nowadays, when you look at the modern bank, it provides no very no right unlimited services, right? So we will discuss. As far as the origin of the present bank, the world first bank is Bank of Venice, right? Bank of Venice in Italy. So that is the formal bank established in the world, in world history. So it is established in 1157, right? Almost 1,000 years ago or 900 years ago, the Bank of Venice has been established. Banking was introduced in Sri Lanka with mainly branches of foreign banks being set up in British colony. During the British colony, the people do trade in our country. In that time, they want money, right? The traders need money. For that, they are facing difficulties in Sri Lanka, in other Indian colonies. So at the first time, the British bank or Dutch bank or French banks were established in these colonies. So, as a branches. The branches initially provide services to their customers. The central bank was established in 1950s under the Monetary Law Act number 58 of 1949, with a major milestone in Sri Lankan economic history. The establishment of central bank is the main, right? The major significant event in our banking financing history. Today, the central bank is governing body of the commercial bank. All commercial banks, all banking sector is under the purview of central bank. Banks which come under service sector in Sri Lanka play a crucial role in its economy, contributing about 60% of GDP and employing 40% of the total workforce, right? So the people, when we look at, when we discuss with commerce students, so what the objective, what's the career plan? So the most of the people says, I want to become a bank manager. Right? In each city, there are many employees works in in banks, directly or indirectly. Most of them are closely related with financing sector, especially banking sector. Banking sector also hold 55% of financial sector assets, while other are held by insurance and real estate companies. When you look at total assets uh, of companies, right? Companies, uh, more than half of the assets are belongs to banks, followed by insurance companies and real estate companies. Right? So you can imagine how big the insurance or the banking sector is. A meaning and definition of bank. It is difficult to give a precise definition of a bank due to the fact that modern banks performs a variety of functions. Right? We cannot limit the function or definition of the banks. Now, the banks provide a huge number of services to their customers. So ordinarily, a bank is an institution which deals with money and credit in such a manner that accept deposit from public and makes surplus fund available to those who need them and help in remitting money from one place to another place safely. So as I told you, right from the beginning of the subject, the bank, the main role is what? They are collecting money from the general public. So there are small amount of depositors, savers. So it's bring all of their money into one place and it gives loan to those who need fund for their businesses or other purposes, right? So that's the main function of the bank. So we can give this as a definition for the traditional banks. Based on the above various definitions, we can understand the meaning of the bank first. Meaning of the bank is mean it's a financial institution, right? Bank is a financial institution which accept deposits, right? Accept deposit from the public. For that, it pays interest on predetermined rate. So the interest rate is already decided. Clear checks, right? When customers submit to the bank, other banks check it clear, right? If they settle the check, make loan if anyone apply for a loan, and often act as an intermediary in financial transaction. Intermediary is a broker. You can pay telephone bill in the bank to the bank, then bank will settle to the SLT or dialogue, like a CEB bill, or you can transfer money from one person to another person. So bank is an intermediary, it's a broker. It also provides other financial services to its customers, such as wealth management, currency exchange, and safe deposit boxes. Apart from the traditional system, banking system, it provides wealth management, right? Wealth management, uh, the wealthy people, wealthy individual, they don't know how to manage their fund, how to manage their wealth. So they can approach bank and they hand over the assets, their wealth, and they are signing power of attorney. They give their rights to handle their assets. For that, the bank charge a fee on that, so they can effectively manage their wealth. Currency exchange, you can exchange currencies, foreign currencies, and if you have any variable assets or variable documents, we can safely keep that document in the bank, safety locker system. Bank management governs various concerns associated with bank in order to maximize profit. The concerns broadly include liquidity management, asset management, liability management, and capital management. Right. When we look at the bank, right, the bank manager include liquidity management. Liquidity management means bank manager should ensure that the bank has sufficient money to meet day-to-day withdrawals and day-to-day new loan applications. So they have to have sufficient amount of money. If they have excess money, right, they may forgone the profit. If they have less amount in their hand than it's required, they may lose their creditability. The customer may be disappointed on that. So they have to have optimum amount of money in their hand. Asset management. Asset primarily, asset means loan. The major asset of the bank is loan given to its customers. So they have to manage properly. There are short-term loan, long-term loan, bank overdraft, right? So they have to manage effectively. Liability management. The main liability of bank is deposits, right? Deposit is the major liability. The manager should predict when when their depositors will request deposits, right? So based on the prediction, they have to keep money, liability. So they have to carefully manage its depositors. And capital management. So they have to have adequate, sufficient amount of capital for their operations. Normally, according to the central bank requirement, the bank should maintain a significant amount of equity capital. And also they have to keep a certain amount of money in their central bank. So those are under capital management. The banking sector in Sri Lanka is monitored by the Bank Supervision Department of Central Bank, right? In the central bank, there are a lot of departments. Department means units, right? Among them, so there's a unit, there's a department in central bank. The name is Bank Supervision Department. Bank Supervision Department of Central Bank under the Banking Act. So, Banking Act, MLA, Monetary Law Act, and Exchange Control Act empowers central banks to control and monitor the commercial banks. There are 4 major types of banking system in Sri Lanka, right? Under the Central Bank of Sri Lanka. Number 1 is commercial bank, it's one type. Merchant bank, investment bank, and saving banks. So these are the 4 types of banks. The current list of banks in Sri Lanka is published by Central Bank of Sri Lanka periodically. So when you visit the Central Bank Sri Lanka website, we can see what are the active banks. What are the active banks? So banks are of various types, can be classified. So we can divide the banks, classify the bank based on the ownership, right? Basis of the ownership and basis of the domicile and the basis of the functions. Let's look at based on the ownership. Banks can be classified on the basis of ownership in the following categories. Number 1, public sector banks. Normally we call it a government bank, right? Government bank. Private bank like commercial bank, HNB, and cooperative bank. So there are 3 types of banks in our country based on the ownership. Public sector bank or state banks. The banks which are owned or controlled by the government are called public sector banks. Although majority of the shares is still with government, therefore these are still public sector bank. Right. You can visit the central bank website. What are the state banks in Sri Lanka? Mainly we have 2 commercial banks. Now number 1, People's Bank and Bank of Sri Lanka. Plus NSB is there. NSB is also one of the government bank, state bank. Saving Bank of Sri Lanka, Sanasa Development Bank. So these are the government-owned banks. Public sector banks, on the contrary, private sector banks are those banks which are owned and controlled by private sector, that is private individuals like Sambat Bank, commercial bank, like that. Cooperative bank, other side. The word cooperative, right? The people in the society come together and they form a bank for their common needs. So that is the cooperative. The word cooperative stands for working together. Therefore, the cooperative banking means an institution which is established on the principle of cooperation dealing in ordinary banking business. The cooperative banks are special type of banks doing ordinary banking business in which the members cooperate with each other for the promotion of their common economic interest. Therefore, we can conclude and define cooperative banking as under a cooperative bank is an institution established on cooperative basis which deals in ordinary banking business for the promotion of economic, social, and moral development of its members on the principle of equality. Right? So this is the definition of cooperative banks. So what are the features of cooperative bank? What is special? How it differ from other banks? Following are the distinguishing main features of cooperative banks. Number one, membership of cooperative banks is voluntary. It's not compulsory. If you wish to join, right, cooperative is like a society. It's a society. If you wish, you can join. Otherwise, if you want to get the services from the society, you can join. Otherwise, you can be there as you wish. Number two, function of cooperative banks are common banking functions. So what they do normally, collect deposit and give loan. But the savings is limited to their members. Organization and management of cooperative banks is based on domestic principle. So the people who are living in that area, in that scope. Main objective of cooperative banks are to promote economic, social, and moral development of its members. Right? So the establishment of corporate societies and corporate bank is to uplift the economic welfare of its members. So that is the main objective of the banks, cooperative banks. The basic principle of cooperative banks, equality. Everyone equal. Everyone equal. Wealthy person, poor person, right? Influenced person. No, there's no discrimination in that cooperative system. Everyone are equal. Everyone is equal in that concept. That's equality. So domicile. Domicile means based on the geographic location. Banks can be classified into the following two categories on the basis of domicile based on the geography. Number one, domestic bank. Number two, foreign banks. Domestic banks mean those banks which are incorporated and registered in Sri Lanka are called domestic bank. So it's right originally Sri Lankan bank. It was established, incorporated by Sri Lankans in Sri Lanka and registered in the company sector of Sri Lanka and registered under the license from the Central Bank of Sri Lanka. Foreign banks. Foreign banks are those banks which are set up in a foreign country with their control and management in the hand of head office in the country of origin, but having business branches in Sri Lanka. For example, ICICI Bank from Indian Bank. It's an Indian bank. It headquarters in India. They have established branches in Sri Lanka. Their management, the control, right, everything in India. They are doing just business in Sri Lanka. Foreign banks are also known as foreign exchange banks or exchange banks. Traditionally, these banks were set up for financing foreign traders, foreign trade in Sri Lanka, and discounting foreign exchange bills. But now these banks are also accepting deposits and making advances like other commercial banks in Sri Lanka. The purpose of establishing the foreign banks in Sri Lanka as its branch. For this, for example, Indian trader who do business, do trade in Sri Lanka. If that Indian trader need money and if he visited to the Sri Lankan bank, most probably the Sri Lankan banks are not ready to provide their services. For the Indian bank, the Indian customer, the Indian businessman in Sri Lanka may face difficulties to help them, right, to promote their well-being. The Indian banks establish branches in Sri Lanka so that the Indian trader, Indian businessman can interact that with bank without any hassle, right? So earlier, banks was established for these purposes, but now that banks also, the foreign banks also now function as a local banks like People's Bank and commercial banks in Sri Lanka. They can accept deposit from the public and they can provide loan to the public, Sri Lankan public. So you can list out all domestic and foreign banks of Sri Lanka. It's your activity. Right. The third types on the basis of functions. The banks can be classified on the basis of functions in the following categories. Commercial banks, commercial banks, the main feature is the accepting demand deposits. Industrial banks, agricultural banks, exchange banks, saving banks, merchant banks, development banks, investment banks, and central bank, right? So these are the banks, categories of banks based on its functions. First, we look at the commercial banks. Everyone knows this. So I don't want to explain much. I just read it. A commercial bank is a type of financial intermediary. Business banking is another, right? Business bank, right? Who keep current account? Normally, business people keep current account. So therefore, this type of banks called business banking. Mostly businessmen use this commercial bank. Business banking is another term for commercial banks. This type of banks provide checking account, saving account, and money market accounts, and that accept time deposit. Time deposit means fixed deposit. Many banks offer both commercial and retail services. Commercial service mean, right, wholesale banking, sometimes called wholesale bank. But commercial banking may also be seen as distinct from retail banking, which involves the provision of financial services to direct to consumers. In Sri Lanka, all commercial banks are controlling under the supervision of central bank. Rather, core functions of commercial banks. Commercial banks engage in the following activities. First, they are accepting money on term deposit. It's term deposit means fixed deposit. Lending money by overdraft, installment loan, or other means. Providing documentary and standby letter of credit, guarantees, performance bond, securities, underwriting, commitments, and other form of balance sheet exposure. Safekeeping of documents and other items in safe deposit boxes. Sale, distribution or brokerage with or without advice of insurance, unit trust, and similar financial product as a financial supermarket, and cash management and treasury services. So these function I have explained you in the chapter 1. Also, merchant banking and private equity financing. Traditionally, large commercial banks also underwrite bonds and make markets in currency, interest rate, and credit-related securities. But today, large commercial banks usually have an investment bank arm that involved in mentioned activities. Processing of payment by way of telegraphic transfer, EFT, POS, internet banking, and other means. Right, industrial bank, right? Industrial bank. So normally this kind of banks are not popular in our area, right? So it's popular, especially they are providing services for the industries, businesses. Sometimes we refer it as a wholesale bank. The industrial banks are those banks which provide medium term and long term finances, right? It provides loan, not bank overdraft, not OD, 5 to 10 years loan, right? Long term finance to the industries for the purchase of land, building, plant, and machinery and other industrial equipment. These kind of banks are not provide loans to purchase apartment, purchase of houses, loan for education, loan for marriage. No, they are giving loan for the industries, business purposes. They also underwrite the shares and debentures of the industries and also subscribe them. So when new companies offer new shares or new bonds, these companies will undertake that shares and they sell that shares or debentures to the public. Sometimes the company itself, the bank, industry bank itself, purchase most of its shares as owners subscribe. They purchase. Initially, they purchase and sell in the subsequent days in the market, stock market. The main function of the industrial banks are also as follows. Number one, they provide long-term finance to industries to purchase land, buildings, plant and machinery, and construction of factory of buildings. They also accepting long-term deposits. They are not accept short-term deposit. They are accepting long-term deposit. For example, right? For example, a company may plan to build a new building, new factory in 5 years. They have sufficient money, but they have no idea to build that factory today. So they have a big amount of money in their hand. So what they do is they deposit that money in the bank for long-term deposit. For that, they can expect a huge amount of interest, huge rate of interest. But they are not accepting this kind of deposits from the individuals. They underwrite shares and debentures of industry and sometimes subscribe to them. Right, agricultural bank, as its name indicates, this type of banks provide services for the farmers. Normally, the commercial banks, right, like HNB or commercial bank, they're not ready to give loan to the farmers because of the high riskness. Due to the unique features of agriculture farmers, government has established a new form of financial system, financial institution, financial bank. Sorry, the bank is what? Agricultural banks. The need of agricultural credits are different from that of industry, business, trade, and commerce. Normally, business people, what they do, they invest today, right? Today morning, sometime they may get return the evening, or within 1 month or within 3 months, they can get their return back. They can return back. But agriculture, for example, paddy, once they invest their money, today they can get money back after 1 year or 6 months, or some plants they may take 5 to 10 years. And also the output, the cultivation also depends on many factors like fertilizer prices, fertilizer supply, climate, rainfall, weather condition, all of things may impact on their agriculture. So it has some unique features. And agriculture, right? And agriculture has both type of needs. It requires short-term credit to purchase seeds, fertilizer, and other inputs. It's a short-term loan. Also, he also requires long-term credit to purchase land, to make permanent improvement on land, or to purchase agricultural machinery and equipment such as tractor or the harvesters. Exchange bank. The banks are those banks which deals in foreign exchange and specialized in financing foreign goods. Exchange bank, sometimes called what? Foreign banks. Therefore, they are called foreign exchange banks. Foreign exchange banks are those banks which are set up in foreign country with their control and management in the head office in their country of origin, but having business in branches in Sri Lanka, right? So foreign bank having branches in our country. Second, saving banks. Next, saving bank in financial institution whose primary purpose is to accept deposits, right? For example, National Saving Bank. No, mostly, right? No, mostly no one approach saving bank NSB to get loan. The main activity is collecting money as deposits from the public. It may also perform some other functions. In some countries, saving banks were created on public initiative, while in others, socially committed individuals created foundation to put in place necessary infrastructure. In developed countries, right, especially in the World War period, after World War, the people established saving banks, right, not government. People, the community has established saving banks. In Sri Lanka, all saving banks are controlled under the supervision of central banks. The function of saving banks. The saving banks serve the man of small earning and without capital by providing a safe place to keep his saving and an experienced agency for investing them so that as they yield him as an income. Normally, saving banks give high interest rate than other banks. Small investors, they can deposit small amount, and that money can be invested by the saving bank in stock market or other market which are providing high interest, high return. The savings of average wage earner are usually not large enough to admin of his investing in bonds, mortgages, and other forms of investment open to the man of means. Nor is the man of the small income qualified by experience in such matter to select a safe and profitable investment. And three, the saving banks takes the small saving of force of individuals which collectively amount to very considerable sums and invest them for the depositors in such a way to ensure safety and fair return. It thus encourages among the masses habit of habit of thrift and industry and accumulate for productive use of money which otherwise would lie idle or be squandered in unwise expenditures. From the standpoint of employment of funds, also there is a wide difference between saving banks and commercial banks. The function of saving banks is primarily that of investment. Mostly, the money invested in the saving banks are invested, while commercial banks make advances to business concerns for current needs. The saving banks invest the depositors' savings to bring profit to him. Commercial banks loan its credit to make profit itself. The saving banks exist for the savers, the commercial banks for the borrowers, right? In summary, the savings banks are act for the betterment of for the betterment of its customers, its savers. But commercial banks act for the betterment of their banks, right? Saving banks earn return for the betterment of its depositors. But commercial banks, right, for the betterment of the bank. So they focus on profit. Investment bank. An investment bank is a financial institution that assists corporations and government in raising capital by underwriting and acting the agent in issuance of securities. Normally, These uh, investment banks active when a new company go for a public. They are going to issue new shares to the public or new debentures, new bond to the public, even the government. When government decide to issue bonds or treasury bill, these investment banks play a major role. Not only that, the investment banks help companies to prepare documentation when they are go for a public offering of securities, equity, or a public offering of debentures. An investment bank also assists companies involved in merger and acquisition, right? One company is going to purchase another company, right? Two companies are joined together, those times, derivatives, etc. Further, it provides ancillary services such as market making, such as brokerage, and trading of derivatives, fixed income securities, foreign exchange, commodity, and equity securities. Unlike commercial banks and retail banks, investment banks do not take deposits, right? They are not accepting any deposit. To provide investment banking services in the United States, an advisor must be licensed under the broker deal. So, next, the merchant bank. In banking, a merchant bank is a financial institution primarily engaged in offering financial services and advice to corporations and to wealthy individuals, right? The term can also be used to describe private equity activities of banking. Normally, these kind of banks are not provide services to the individuals, right? The chief distinction, the difference between investment bank and merchant bank is that merchant bank invests its own capital, right? Merchant bank invests its own capital in the client's company, whereas investment banks purely distribute, right? Normally merchant banks, they give their own money to buy stocks of other companies. They give, right? And investment banks, they are acting as a broker. They promise to the issuing companies that we will distribute and sell and collect money from the investors, right? So they are not doing business with own money. Both merchant banks and investment banks provide fee-based corporate advisory services, including in relation to mergers and acquisition. In Sri Lanka, all merchant banks are controlling under the supervision of Central Bank of Sri Lanka. What are the functions? What are the functions of merchant banks? Primarily, the merchant banks are involved in international finance and long-term loan for multinational corporations and governments. They provide both credit finance, loan, and underwriting services, insurance, portfolio management, leasing, loan syndication, project finance, insurance management, right? All these functions I have explained in chapter 1 in detail. Development banks. A development bank is a national or regional financial institution designed to provide medium and long-term capital for productive investment, often accompanied by technical assistance. When you look at Sanasa Development Bank, Uva Development Bank, right? So these banks are specialized. They are providing services for that region, right? They are not only provide the loan, they provide technical assistance as well. Development banks or development finance institutions, as these are normally called in the financial world, as a post-World War II phenomenon. The establishment in Africa, Asia, and other developing countries, in most cases, coincided with the attainment of independence. Right after World War, the whole economies of the world went down. To recap, the businesses, they have established development banks throughout Europe and other continents. Functions. What are the functions of development banks? Provision of capital to industries which can play role in economic development, lend money to small scale industries, series of mutual funds, and fundraising scheme for development companies, project advising and services, and project management. So these are the functions of the development banks. So look at the central bank, right? Central bank we have discussed in the chapter 1. So please refer that back. Type of commercial banks, right? Commercial banks, we can divide, right, in different bases. The commercial banks, on the base of system, it may be called as a mixed banking, invest banking, and deposit banking, right? This is based on the system. On the basis of structure, it can be unit banking, so branch banking, group banking, chain banking, and corresponding banking. So I will give you, right, the deposit banking, right? So we start from here, deposit banking, invest banking, and mixed banking. We start from here, right? We get an idea what is deposit banking, and investment banking, and mixed banking. The combination of deposit and investment banking called mixed bank. The major activity of commercial bank is to accept deposits from the public, which is repayable on demand. Whenever the customer depositor requested money, the bank has to provide and provide loan and advances through available resources. So that is deposit bank. Normally we call this kind of bank as a commercial bank. This system of attracting deposit to mobilize resources for the purpose of short-term lending can be termed as short-term banking. That's bank overdraft. This system gives importance. The system gives importance of the fact that commercial banks accept deposit repayable on demand. They act as a trustee for the hard-earned money for large number of depositors, right? They are safeguarding. They are safeguarding their money. Deposit banks is justified only when the following conditions are present. Banks can confine themselves to deposit banking only when there's a financial machinery to meet fixed capital requirement. Normally, to accept deposit from the public, they have to have a big amount of capital. It's a requirement. Anyone can provide loan to the public, but to accept deposit from the public, it's very hard. They have to pass as many legal, right, rigid legal requirement. Banks which have less capital and reserves cannot acquire long-term assets or speculative or risky or non-negotiable securities, which cannot be easily converted into cash or emergency. So, right, people deposit money so they can invest somewhere. Some investors, if the investors come to the bank, approach the bank and withdraw money, so if they have sufficient capital, it's very hard to settle them. So that's why the central bank have give more rigid requirement on that. Maintain own capital rather than borrowed capital, right? So normally deposit banks run based on their own capital, not on the law. Investment banking. These are the financing institutions which provide long-term finance to business corporations and governments. Look at here, not for individuals. So they provide services to corporation and government. So we call them as wholesale, right? Wholesale business, wholesale banking. Generally, the purchase, the entire issue of new shares and bonds of business corporations or government bodies and resell them to the public. Operational techniques of investment banks and investment bankers are as follows. Preliminary negotiation, seek deposit dated report, nature and type of product produced, condition of plant and machinery and other assets, its capital structure, and the objective of the new issue. Opinion of the experts, technicians, and professional accountants. originator enters into the agreement. Now we look at, right? We look at a mixed banking, right? A deposit banking and investment banking come together. Mixed banking. Normally in our country, we have commercial bank, HNB, a People's Bank, right? Those banks are mixed bank actually because they are providing services to the public, they accept deposit, and also they provide long-term loan to the businesses and governments. So therefore, those are mixed banking. The essence of mixed banking consists in attracting deposit from the general public and providing short, medium, and long-term capital to its industries. Under the mixed banking system, banks play major role in industrial development of the nation. The banking system is basically comprised of the deposit banks, but in addition to it undertake the risk of meeting heavy capital requirement of the industry. Right. Now we look at the structure, right? Structure, not the ownership structure. Some, right? The banks are having its own structure. Unit banking. Unit banking means they have no branches. They have only one location. They have only one unit, one bank, no branches anywhere. That is unit banking. Branch banking, right? A bank which establishes branches throughout the country. So that's called branch banking. Group banking, two or more banks come together and do the business. That's group banking. Chain banking, right? One owner. They are owning two or more banking, two or more banks called chain banking. Correspondent banking, normally small banks, they collect money and deposit their money to the another bank, correspondent banks. Right, unit bank. In the system, the corporations are carried through a single office and continue to a particular area, right? So it's a right unit bank, no branches. The bank maintain no branches. In some exceptional cases, the bank is allowed to have branches within limited area. The size of the bank and capital is limited. The unique feature of unit banking system is the correspondent banking system. Unit banking refers to a single, unusually very small bank that provide financial services to its local community. Like so, the cooperative banking, normally cooperative bank coming under unit bank, right? It has no branches. So uh, these functions are established within a limited area. Typically, a unit bank is independent and operate without any connecting bank or branches in that area. It has no need any other branch networks. Advantages in unit banking, right? Quick decision, economy of scale, operation, personal contact. And disadvantages, personal contact into risk. So they may give loan to a known people, known person. They may have some sort of influences. Limited financial resources, they cannot provide a big amount of loan. Economic charges stand in its impact. Branch banking, this is a system where the banking business carries a single bank with a network of branches throughout the length and breadth of the country. Throughout the country, normally in our country, all banks coming under the branch banking, right? The affairs of branches are directed by the branch manager in accordance with regulations and policies of head office. Each bank is single entity owned by a group of shareholders and centralized by a group of directors. So when we look at the advantages, economic of scale, a large scale of operation, economy of reserve, and remittance facilities, greater stability, reducing interest rate disparities, peak expansion of branches, spreading of risk, and enhanced profitability. When you look at the disadvantages, lack of personal knowledge, lack of effective control, delay, and red tapeism create monopoly power, affect of bank failure to the economy. So it's a thing we may understand easily. The group banking, right? It's a new concept to you. This system aims to increase the efficiency in banking operation with a decrease in operational cost. Right? They are rather than being a competitor, they are work together as an alliance. The term group banking refers to bringing two or more banks under single control and management. Group banking enjoys economic of scale, extensive customer services, greater mobility, efficient management, etc. The group banking system also faces supervision problem, risk of speculation and manipulation, restriction on health competition, right? So if everybody, if banks are become alliances, right, there will be a less competition, and so it may affect the competitiveness and may adversely impact the customer services. Group banking can also refer to the control that a company has over two or more financial institutions. Right. Group banking, two or more group banks work together. Right. The chain banking is little different. This is basically developed over group banking system. Unlike group banking system, the power are not vested in holding company, but vested in a single person. In our country, Dhammike Pereira, he may control, a single person may control a few banks, right? Few major banks, right? That banks may consider as a chain banks, right? But vested in the single person or by the same group of person, although the ownership of stocks through common membership of board of directors or otherwise. So single person can control. The internal group shall control member banks. So these banks coming under group are called chain banks. Chain banking is a form of bank governance in which individuals or an entity takes control of at least three banks that are independently chartered, right? Three different banks. It is not like branch banking or group banking because banks within such a system are separately owned, are not part of the same entity. Corresponding banks, small bank. For example, cooperative banks. So it's a small, it has no safety lockers. It's risky to keep money with your hands. So what they do is in office days, they open the office. There are a few officers in the bank. They collect deposits, right, from the public, and they deposit that money, right? They keep that money in another bank, right? In another bank. That could be large bank, right? Correspondent bank. It's called what? Correspondent bank. Sometimes it's called what? In our term, we can call as sub bank. This refers linking banks through deposits. The regional banks or small banks operating in a smaller location will deposit their cash reserves in big banks or nearby city banks. The smaller bank is called correspondent bank, whereas the major bank, the large bank who hold the deposit for the smaller one, is called correspondent bank. Hence, the system of banking result in connecting all units over the country. Virtual bank, sometimes we call them online bank, right? It does not have a physical office like we can what do you call PayPal, right? So PayPal, there's no physical office except a few area in one location, right? So mainly their businesses in online, Visa, Mastercard. So these are in right in one virtual. Virtual banks denotes the provision of banking and related services through extensive use of information technology without direct resources to the bank by the customers. The origin of virtual banking in the developed countries can be traced back to the 70s with the installation of automatic teller machines, ATMs. The virtual banking service include ATMs, share ATM networks, electronic fund transfer at point of sale, a smart card, stored value card, phone banking, and more recently, internet bank. Universal banking, right? Sometimes called international bank. Universal banks refers to providing all financial services under one roof. Sorry, not international bank. Right? So bank, all services are provided in one roof, in one location. In Colombo, we can have Sambat Bank head office. You can get all banking services in that location. These include long-term loan to industries, venture capital underwritings, brokerage, corporate advisory services, and insurance, and so on. So we can take it as an assignment. Briefly explain the following terms in the banking system. Please take a note on this. Please take a note. Right? Have you get screenshot? Did you get screenshot?
Yes, sir. Got
Okay. So also this, take a screenshot.
done, sir.
Okay, thank you. And function of banks, normally we have already discussed primary functions, accepting deposit and providing loan. So we already discussed this kind of private services. And secondary functions like agency function and utility functions, normally fund transfer, periodic payment, collection of checks, portfolio management, periodic collections, and the draft, locker, underwriting, right? So we have discussed in chapter 1 and chapter 2. So I don't want to repeat. And so you can read by yourself. History of banking, you can read, right, if you want. So I am not going to test for the exam. In the exam, right? So you can read if you have. Right, now we will
Excuse me,
stop the
sir.
session, right? Stop the session.
Excuse